Hey traders, Chris Pulver here. Happy Monday, everybody. It's the 16th of March, and this is the weekly outlook for stocks, Forex, cryptos, the week of the 16th of March through the 20th of March. I don't think I need to say that this has been interesting times over the last couple of weeks. I think any trader out there that's been in the markets is certainly experiencing things they have not seen before or have not seen in a very, very long time. Last week, we had major moves in the markets. I had some screenshots I just had to take on my phone. Last week, the Dow Jones was literally experiencing 1,000-plus point swings every single day. And Friday, the Fed made big news announcing a $700 billion package for short-term liquidity and short-term help to aid this recovery, or at least suspend the chaos that's going on with the coronavirus pandemic, which continues to climb and get worse. But I did read a super interesting article on the Washington Post. This is just the image right here. I can just quickly explain this. I would recommend you try to check this article out. What this showed, this actually ran these simulations of a free-for-all showing the curve of people getting sick. This was using it was using a simulated disease. It doesn't count the death toll. It doesn't take age and demographics into consideration. But note the exponential growth of the disease and contact and just, the ability for something like this to spread worldwide. Attempted quarantine, which you've seen aggressive measures from China, aggressive measures now in Italy, Spain, parts of Europe. We are now experiencing what's called social distancing, and there's moderate to severe or extensive social distancing. And what's amazing is this is showing, again, this is simulated, but this is showing the best type of containment for the spread of this disease. And all this means is stay 6 feet away from people. Use sanitizers, use hand sanitizers, wash your hands all the time. Don't touch your face, don't touch your mouth, to help contain the spread. So it was very reassuring and kind of uplifting to read something like this, to see wow, we can actually contain this. But at the same time, what measures are being taken to encourage social distancing? Well, I happen to live in Michigan, and we just had an announcement this morning that bars, restaurants are closing for foreseeable future, at least for the next 2 to 4 weeks. Most schools in the area are closing. Friends of mine that are teachers off for the next 2-3 weeks. It kind of times out where they're taking time off now, possibly extending through spring break, possibly done for semesters. Colleges are done through the rest of the semester or going to e-learning only. So it obviously seems like a big shift, but we have technology to accommodate this. I mean, if you were to see this 10 years ago, I think that the sheer panic we're experiencing now would be exponentially worse if this was a decade ago. However, there's certainly panic. There's tons of concern, and things are happening every single day from, oh, my sports are canceled, or this. I mean, I get it. It's something we have not experienced, and truthfully probably not really ready for. But if anything comes out of this that's good, it would hopefully be the fact that, look, a little social interaction or lack of, or social distancing can certainly help. I think this can give some optimism to show that there is a way to contain this without this exponential spread. And the extreme cases that we're seeing in China, the mandates, the quarantines, it helps. But the big thing is, I mean, amazingly, again, simulation-wise, social distancing. So I thought that was really interesting. I was going to actually post my weekly outlook image with this because the Fed did deliver another emergency rate cut. So the monetary policy bazookas are being thrown around. New Zealand cut rate. So let's go into the charts and the calendar here. So we had this emergency cut this week. So here's Sunday night. Markets open, crazy amounts of volatility. The RBNZ, which was scheduled originally to have their rate decision at the end of the month with no projected forecast, came in Sunday night, slashed rates by 0.75% all the way back down to 0.25, which puts it now on par with the Australian dollar. The Australian dollar and New Zealand dollar continue to remain under pressure. We had Trump speaking last night. We had the Fed come in right around open as well and slash rates a full percent. So they went from the 1% to 1.25 window. They cut overnight, emergency rate cut again to 0% to 0.25. So the Fed is throwing tons of monetary policy at the coronavirus pandemic, and so are other central banks. Now what's left to see what happens this week is, will there be a fiscal stimulus package to help small business, to help fight testing, to help just kind of help weather the storm economically? Because if not, it's very easy for this panic and this shrinkage to easily turn in and transform into a recession. We have crossed the 20% thresholds across the market. Last week was one of the wildest moves we've seen since 2008. The Dow Jones ended up having one of the biggest days on Friday, but that was overshadowed by the fact that the Dow Jones was still down over 10% for the week. The S&P was down almost 9% for the week. The NASDAQ 8%. Bitcoin getting crushed. Bitcoin was down 40% for the week. It's crazy. All right, volatility again at highs. We had gaps this morning. I actually waited to do the video this morning until I could see where things were opening during the U.S. markets because trading was halted last night. We had the futures market, even after the Fed came in and said, hey, we're cutting rates a full percent. We're going to be at 0%. The market's like, hey, that's great. That's cute. But the panic button remains on. So anyway, it's going to be interesting to see how Wall Street plays out. Here is a look at the markets this morning. This is the triple weighted S&P. This is an inverse ETF with the S&P 500. We are falling back a little bit. Crazy run for the last little bit. I've had trailing stop losses in and running. Took some profit. Looks like this morning with us pulling back, I'm taking some profit. I also had some running on my volatility measures. This is the VIXI, which had a nice gap higher. Again, this pullback here will most likely close me out. I was actually moving this up last week with a 10% trailing stop. So somewhere, I'll have to double check my exit point, but bought it at 1760, had this run up into the high 30s, and I had a trailing stop in there by about 10%. So I'm going to see if I still have the position on, or with last Friday's push down, even though we gapped higher today, I may have been stopped out with that tight stop last week on the VIXI. Also, UVXY was another one that we have gapped higher. Same thing here, just crazy big run. Bought it at 20, ended up running up towards 68. Gapped higher today towards 80. So incredible amount of opportunity to take these inverse ETFs and make some pretty sweet money on them. TVIX was another one. This was a 10-to-1 reverse split that I bought at $10 split. So my base position was 100. Had a trailing stop running up here. It was at 429. So pretty nice to have some runs on these volatility instruments as well as inverse ETFs to kind of hedge and make some money on the sidelines as I'm looking to see what's happening in Forex. Speaking of Forex, what I've been doing is scalping. Quick announcement and super important if I have any followers out there on my social media outlets. If you are following me on Instagram, Twitter, if you message me on Facebook or follow or subscribe to my YouTube channel, you can now join my trading room. I get comments on this every single week. I'm sorry that I haven't had direct links to them, but now we do. This is what I've been waiting for. We have smarttrader.com. We have a marketplace. So if you go to smarttrader.com and you can go into, in fact, I'll go to the incognito mode and just show you how to do this. So if you have not used smarttrader.com, that is a charting platform that is super easy to use. I use it every single day, and I'm also able to share my workspaces and analysis with the traders inside my room. So I'm going to go into Smart Trader here inside the incognito window. And right here at the top, so this is just smarttrader.com. If you click on Marketplace, there is a featured room called the Flex Trading Room. That is my trading room. You can join me, and we trade together Tuesdays, Wednesdays, and Thursdays. I've actually shifted the schedule this week where we're going to be trading at 3 a.m. Eastern time to accommodate the Frankfurt and London Open because volatility is extremely high. We're looking to trade euro pairs and pound pairs and get some scalping opportunities this week, along with talking about other setups that we have going. So, this week is going to be a super active week. I have modified the schedule. I'm excited about this because volatility is extremely high. I want to make sure that I'm positioning myself for success in the short term to make profits along with all this craziness that's happening in the markets. Stock markets jumping and running 1,000 points up, jumping and dropping, 1,000 points down, gapping and halting markets every single day. A lot of traders are just watching. A lot of traders need some help. A lot of traders are looking to take advantage of this, and that's exactly what I'm doing. I'm trying to use this as an opportunity to be profitable because one thing we need as traders is movement, and there is certainly no lack of it. So don't be afraid. It's all about equity management. It's all about trade size. It's all about process. So this is a nice way to join me in my Flex Trading Room. I do this every Tuesday, Wednesday, Thursday with live sessions, and we also sprinkle in some bonus sessions in and around the monthly news. We focus on stocks, we focus on Forex, we focus on cryptos. I'll just give you the brief overview right now. Cryptos, I'm long-term. Forex, I'm whatever it takes. Long-term, short-term, medium-term. I'll trade whatever looks good on Forex because that's been my bread and butter for the last 10 years. Stocks, I've been a stock trader for almost 20 years. But it is, take advantage of the craziness right now with the inverse ETFs and the volatility. And, get ready to buy in discounts. I'm not calling the bottoms yet, but I'm looking at good instruments and recession-proof stocks that I want to buy and hold at a 30-40% discount perhaps. So anyway, it's a lot of fun. It's a great way to get started. It's a great way to accelerate your learning curve if you're looking for help. And there's an easy way to join right now, smarttrader.com, marketplace. There is the Flex Trading Room right there. If you have any questions, again, feel free to reach out to me on those social media outlets. If you have any questions on how to join, Instagram, Twitter, Facebook, or YouTube, you can find me out there, and I'm happy to help. And if you come in this week, if you jump into my Flex Trading Room this week, again, we'll be live on Tuesday, Wednesday, and Thursday this week at 3 a.m. This is actually my Flex Trading Room document right here. I would like you to come in. We use GoToWebinar, and I'd like you to just type in all capital letters, Marketplace, because I want to see who's coming in this week that's using this weekly outlook and joining me just to say hi. But let me know that you're out there. You're getting the link directly from a Marketplace because we just launched it last week, and it's awesome, and I'm super excited about it. So that is that on that note. Let's talk about the charts. Let's get into some trading right now. So some scalping opportunities. I was actually scalping this morning. This is what I was doing for myself this morning at 3 a.m. We're going to do this tomorrow in session as well. The last week or so has actually been all about scalps. So we had a little scalp on euro dollar, a little scalp on dollar yen. We tried to scalp the dollar yen a couple of times. It worked out pretty well. I mean, there's 100 pips there, 110 pips on dollar yen, then a break even. That I missed the run. I mean, this actually broke down from my entry. I wanted to sell it at 105. We ended up going all the way down to 103.30. But the next day or 2 days later, we were up to like 107, almost 108.00. So there's been just a ridiculous amount of volatility on the yen pairs. Scalp the Aussie yen, scalp the dollar yen again, and then this morning, this is actually Euro CAD, Euro yen, Euro New Zealand. Ended up grabbing some pips there. That's 95 pips in profit, -9 because the Euro CAD was a little bit late to the game. So I was up for a couple of hours, did some trading, pretty straightforward stuff, made some pips, went back to bed. Here we are looking for the outlook, and again, trading continues. So looking to modify and adjust the schedule to make sure that we're stepping in front of the charts at a good time. So if you take advantage of that marketplace, again, come in, join me tomorrow. Tuesday, Wednesday, Thursday, we'll be live. Type in the word marketplace when you sign in, and I just want to see who's out there saying hello and joining us for the first time. Let's get into the charts. Let me get into my Flex Trading Room workspace here, and let's talk about some charts. So let's start with the dollar index, which has had one of the wildest turns. I mean, we talk about this volatility. This really illustrates it excessively well. I have been waiting for a dollar correction for a long, long time, almost a year and a half to 2 years to see something significant on the US dollar, and we finally get it. We had this nice little holiday break to the downside, made some profits there, had a nice slow retracement to the upside to retest those highs from 2019, hit it again, and then dropped a ton. But what has happened in this is a daily chart. Look at last week's daily price action. Remember, the Fed just cut rates from nearly 2% to 0%, and yet the dollar is just zooming. So as far as monetary policy goes, I mean, it is a race to the bottom once again. This is trying to step out and provide some type of Wall Street reassurance, financial market reassurance with central banks, taking the front lines and saying, look, we're going to slash rates, we're going to boost, we're going to put QE out there, blah, 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 blah. All the stuff they did back in 2008, 2009 to try to tip the scales and sentiment back into some type of confidence. But, I almost feel like it is a bloodbath for Q1. We're about 2 weeks away from wrapping up Q1. Maybe this is, just hemorrhage it out, get it over with, get it out of your system. Okay, it's a nice little pun considering we have a pandemic right now. But let the market just kind of purge itself of all this uncleanly selling and all this panic selling, and then Q2 we can actually recover. April into May, maybe we have a nice little recovery going into summer trading. We'll find out. But day by day, I mean, this is a crazy amount of volatility to have this nice structure that I've been waiting for almost 2 years, and then have it just kind of thwarted all the way back up. Now, we look at the higher time frame, the weekly chart, the monthly chart, they still show a ton of resistance with these highs back in 2017. This is the end of 2016, early 2017, when we established a nice little top on the dollar. If we are just zooming up to those levels once again, even though we have this heightened volatility, one thing that I'm still kind of looking for and I plan around is on the higher time frames, I still do suspect and expect price to work in some semblance of a technical move. Now, we are seeing more and more volatility. Some look like we're seeing irrationality in the markets every single day, but that's not really the case. I mean, on the larger time frames, we still have these very critical levels, and the dollar index here, to me, is still facing some heavy resistance around 12,600 would be that high back in 2017. If we hit that again, especially with the velocity and trajectory that we have rallied on the daily chart, if we go straight up on the daily chart, I would almost imagine that we go straight up on the daily chart, have some indecision, and then we start coming back down. And this might be just a massive shakeout. This might be this big move down, big move up, big move down. Traders are just left, dazed and confused, and then all of a sudden we start to see the technicals come back and behave. So if this resistance does hold, I still maintain that I'm looking to be a seller on the dollar and looking for some recoveries on the respective currency pairs against the US dollar. But for right now, this is, I think, best served as a scalper. I'm looking for day-to-day opportunities. I'm looking to limit my overall exposure. I talked last week in my trading room about some of the trades that I'm in, some of the positions that I'm in, and looking to kind of minimize some of the exposure or use some of it, start positioning differently, but use my margin that I have now and start focusing on short-term opportunities so I can just be looking to take profits, day to day or week to week. And I can either wash out some of the drawdowns that I'm currently in, just some small drawdowns and small trade sizes. I can wash those and just wipe them away, or I can sit and hold and just be fine with the longer term positions, meanwhile making profits and keep moving my equity curve to the upside. So it is definitely a balance. It's definitely, it's been a around the clock schedule the last couple of weeks. Asia sessions have been extremely volatile. U.S. Opens, Wall Street Opens, futures markets have been, we've halted trading now 3 times in the last week. So it's just, we are experiencing some very, I'm not going to say, impossible times, but it's like there are circuit breakers in the markets for a reason to keep things kind of under control. But the fact that we are testing those thresholds every single day, it does make things, again, it's just crazy, but it's movement. And at the end of the day, that's what traders need is movement. And we're getting it, so it's best to look to take advantage of it. So what am I looking at the dollar? I'm looking for resistance to still hold. This might be, like I said, just an incredible amount of volatility and a shakeout, ultimately leading to resistance at 2 to 3 year highs, 4 year highs, and we start just balancing again. This might be, like I said, up here to straight down to straight up to straight down. This might be this massive shakeout. The market might stall a little bit here, and then we'll see if we proceed lower to maintain that this is still resistance and it still holds true on the higher time frame. We will see. We've been tracking the coronavirus in the cases. I would love to see that our cases have blown through 100K, but we are looking at recoveries hopefully on the rally as well. So it would be nice to see something like this tapering off and plateauing, and then seeing recoveries getting kind of on that exponential curve to again kind of impede the panic that we're seeing right now with coronavirus taking over the world in kind of the pandemic fashion. But again, let's focus on trading right now. So dollar index, that's what I'm looking for. How does that play out? Well, expect more volatility on dollar pairs. Euro dollar, for example. Again, you can see kind of the inverse of the dollar index here in the euro dollar. We go from 108 to nearly 115, come all the way back down to the 618. This is Fibonacci zone at the 618 pullback. That's right around 110.50. Now, if we see the dollar have some indecision, and then the dollar index drops bearish, this euro dollar will stay bullish. It might be just a big shakeout because we've seen this big low to high swing. We had this big high to low correction. We might have some indecision. It might come all the way back down before we go higher again. We're not exactly sure what we're looking at here, but I am actively looking to buy this euro dollar if we can confirm some bullishness. So it's not confirmed yet. I think we have some great levels here on the Fibonacci zone. I think we're seeing a lot of indecision right now for this kind of balance. The Fed slashing rates brings kind of the appeal of the dollar down quite a bit from the majors, although it still might be considered safe haven. But that's what the Eurozone has shown over the last 3 to 4 weeks is safe haven trading. So the yen, the euro, the Swiss have been safe haven trading. If you take a look at something like the currency strength chart, which I have right here, this is the pricing for today. And we see the Japanese yen getting excessively strong, and then at the Wall Street Open starting to dip a little bit. We have the New Zealand rallying slightly. We have the Aussie and the CAD getting beat up. You can see here that the Euro and Swiss completely in lockstep once again. We do have a Swiss National Bank announcement at actually this week on Thursday. If they decide to do something a little bit more extreme than already having negative interest rates, and the Swiss National Bank has something to say about what other central banks are doing in response to the coronavirus, then we might see this separate for once. I do like the technicals of the Swiss. I don't love the fact that Swiss is a risk-off trading currency pair. So it puts the Swiss National Bank in a tough position. But as far as the overall exchange rate, they have one of the strongest currency pairs in the Forex world right now, because we're looking at many of those currency pairs sitting near or at historical levels, like historical lows on Aussie Swiss, New Zealand Swiss, very close to historical lows on Euro Swiss, Pound Swiss. Dollar Swiss, we have some big ranges, but we've been almost 1,000 pips off the highs from the dollar Swiss. So if this becomes a disconnect where the euro can actually sustain some movement and the Swiss can drop, I mean, I would love to see the technicals play out where the Swiss gets much, much weaker, and it happens pretty quickly. But I do think that in order to see that, we probably need to see the stock markets settle down a little bit. I think we need to see volatility shift from this just crazy run up to starting to balance and pull back. I think we need to see the volatility index probably get back below 50, which right now the VIX is at 74.6. So this is the day's volatility index. Last week on the big rally in the stock market, we dropped all the way back down to 58. Now we're right back up towards the highs once again. I mean, it is, we will not maintain this trajectory forever. But the fact that we have gotten there so fast, this looks eerily similar to what we saw back in 2008, where we peaked out highs around, around 96. And from there, I mean, now we have resistance at 50. So this is not really an indication for direction, although obviously the VIX going up, the high fear gauge, has sparked a dramatic sell-off in stocks. So most likely as this continues to increase, or if it's increasing, we will see stock markets dropping. All right, but once we start topping out and falling, perhaps we're looking at that kind of intermediate pause or that intermediate bottom in stocks as maybe recoveries, increase, or maybe there's some light at the end of the tunnel with coronavirus here over the next, maybe 4 weeks or so, maybe the next 4 to 6 weeks. We'll see. But anyway, the VIX has been a very telling story with how the velocity and trajectory has been so violent. And I think that's caught a lot of traders off guard. But here we are again at 74 and change. Are we going to stay there? Are we going to, I've got chart alarm set to go above. I'm actually going to set a chart alarm. Let me go back to that daily chart. I'll set a chart alarm back here to see if we can I'll just put settle down back to 54. So settle down, ? And that just goes right to my phone. So that's nice to have. Okay, so that's euro dollar. When I'm talking about currency pairs and trading, here's what I'm looking at. Okay, I expect the Japanese yen to still be moving aggressively. So dollar yen, look at all the volatility. Dollar index, dollar yen, we went from a break, which was actually really nice. We traded this long from 110 to 112. We shorted it back below 108 all the way down to 105. Then we gapped over the weekend, went all the way down to 101. From there, there were some nice gaps to fill. There was a flash crash to fill, and we went from 101 all the way to 108 again. So volatility everywhere. What would I do right now on this dollar yen? Trade it short term. So look, if you come into my trading room, here's what we're going to do. We trade tomorrow morning, Tuesday morning, Wednesday morning, Thursday morning. We're looking to scalp. I'm looking for some opportunities on Euro Aussie, Euro CAD, Euro Yen, Euro New Zealand, Pound Aussie, Pound CAD, Pound Yen, and Pound New Zealand. The London session typically has a lot of volume and good volatility. It's nice and liquid. The spreads aren't terrible. I know that some brokers have increased spreads a little bit. I haven't seen any massive changes in margin, but spreads are increasing slightly. So things to be aware of, but short-term opportunity. It's a really straightforward way we're going to trade it. And then elsewhere will be positions. So I still have positions on Aussie Swiss that I'm holding. I'm probably going to have to do some maintenance on Aussie Swiss. I got filled back at the flash crash lows from last weekend. I got filled there overnight. Now I'm maintaining a small position. I did some haircutting last week and trimming some of these worst positions. So I'm going to maintain, my plan here is to maintain a group position for a medium to long-term recovery on the Aussie Swiss, or just a weakening in the Swiss in general. I maintain a position on the Euro Swiss, where we're sitting at 105.50, but we have the Euro and the Swiss in lockstep, and we're also looking at this massive channel support from back in 2018, looking at a 2-year support level. And we have a fifth wave that's coming to completion. So I'm hoping, and again, it's not about hoping, it's just technically we're in this zone to look for some bullishness. Now, if this retracement comes back into 110, 110.50, I'll be super happy with that because I've called the target at 110.50. That's a yearly pivot. But we need to see something separate the Euro from the Swiss. Right now, they're moving pretty much lockstep. We need to see something separate where the Swiss maybe takes a more aggressive stand to weaken. And if that's, chalked up as intervention, manipulation, we're seeing it all over the place. So, I mean, I'm not going to put the blame game out there for these central banks that are trying to do things, because the Fed has been super active for the last 2 weeks of slashing rates from near 2% down to 0%. So everybody's in the same pool right now. But Euro Swiss, technically speaking, looks fantastic. It's just not changing because they're both very strong right now. I'm trying to think other currency pairs. Oh, position-wise, Aussie, New Zealand. This one was, I think there's something bigger going on here. We're in the low 101 level. So here's what I'm looking to do on this Aussie, New Zealand. We have not been lower than 1.0040. What I would expect to see happen here is as we're dropping back below 103, we're currently trading just above 101. If we end up coming into this parity level around 1.00, I'm still maintaining a group position. My break even is around 104. All right, I'm still maintaining a fairly small position. I do expect this once we get a turn that this is going to go significantly higher, 107, possibly all the way back up to 112, and ideally all the way up to 114. Now, it makes me look left on my chart. This goes back to the daily and weekly chart back in 2014, 2015. We saw a kind of spring trend. This is April 2015, where we saw a nice low back in April, a nice double bottom back at the end of April, and from there we went from 1.0040 all the way up to 1.14 within the next couple of months. So if we are pushing to retest those lows, I would like to see something happen very similar where we have these lows holding and a transition. Right now, why do I think this transition can happen? Because we have the RBNZ and the RBA both at the same rate, 0.25%. Okay, so if we are quickly dropping, I really think that, in the Forex world, in the trading world, even though this is dropping, there are other bigger players like market makers and banks that have to take the other side of that trade. So I do think that this is positions being taken to, shed the shorts, take profits on the shorts, and then start positioning for longs. And I think the longs can get us all the way back up to this level at 105, this level at 107. And ideally, I'd like to take this as high as humanly possible. But I think this is going to have to be, it'll require some patience, as we've been extremely patient this entire year thus far. But this currency pair does a great job of paying us. So position-wise for me, Aussie Swiss, Euro Swiss, Aussie New Zealand. I'm being careful on my trade management. That's the next video that's going to come out this week. I've got to do a final touch-ups on my Keep It Seriously Simple video series. I've got a trade size, margin, leverage video coming this week, so keep an eye out for that on my YouTube channel. It's just super important stuff. And it's super important for me, looking to trade, medium term and long term. And it's super important for any trader that's looking to get into trade and survive and try to do this either, part-time or full-time. It's like you have to figure out a way to survive. You have to figure out a way to make money. There's a time and a place to be precise. There's a time and a place to be flexible. There's a time and a place to use big trade sizes and small trade sizes. But, in that sense, you have aspects of that you can control, and that's the important thing. There's a lot of things we can't control, all right? But the things we can, we want to take full advantage of. All right, so that's my position stuff. Everything else, I'm going to keep this video very, very simple. I want to scalp. There's so much volatility, there's so much movement. I'm looking to position myself and scalp, stay neutral. I've got positions on these main three: Aussie, New Zealand, Euro Swiss, Aussie Swiss. That's really it. Everything else remains kind of small and under control, and then I'm looking to scalp on, Euro pairs and pound pairs this week. Possibly scalping on yen pairs. It really just depends. I think that I'll throw in, Euro yen, possibly Aussie yen, and New Zealand yen. Dollar yen kind of remains a mystery right now because we've seen so much movement volatility on the dollar, but that's really what I'm looking to do is short-term opportunities, short-term systems and strategies. I have the plan to do it. We've talked about this in the trading room. We'll continue to talk about it next week. Right Trader, this is one of my favorite visuals to be trading with some precision. We also have some great measurements, and there's just a really easy way to look at, are we too extreme on the trend? Is it balanced? Are we looking at short-term opportunities from smaller time frames to higher time frames? It's really easy to align. It's really easy to trade. So we'll have a lot of fun doing that this week and many more. So on that note, traders, here's what I'm looking for. Okay, I'm going to be watching the VIX today. I'm going to be watching the VIX this week. I want to see where the pros close the markets. Right now, the stock markets are, again, even though the Fed cut rates to zero, okay, the market is still in a tizzy. We still have the panic attack going on. This is the retest of the lows from last week. Okay, we had our lows from Thursday, our big rally on Friday. Oh, wow, what a sigh of relief. And then right back down to the lows. Okay, think of the market as like a shakeout. There's so much volatility, so many traders are getting, whipped around, and we've got, wild gaps and crazy opens and halting tradings through the mornings. You just have to figure out how to weather the storm. You got to figure out how to trade short-term volatility and take advantage of it. I think that, once we start to find some footing, we are in that questionable bear market territory. We have crossed below the 20% threshold. We are very close. And again, this is probably a psychological thing. Look at our daily chart. Look at our 50 and 200 EMA crossing over. Okay, now we are clearly below the lows here. All right, but are we going to cross below and stay below? Are we going to cross below and recover back up? And this, again, these are indicators. They only mean so much, but if you look at the significance of them, the 50 and the 200 for a long time have maintained some really good positions. Now, you can see that we had a brief crossover here back in 2018, right? The 50 and the 200 EMA crossed over. We found some lows. We crossed back above. So we've had our big movement to the downside. I will look to see, do we recover at all and use the EMAs as resistance? Is this now, sell the rally and that resistance holds and we continue to head lower? Or is this like we had here where this is just a purge, a cleanse, get it over with, cut off the limb, and the market is now just offering such good levels that with the central banks taking the actions that they have and possibly fiscal packages rolling out next and very quickly, if we can start seeing some bottoms to hold. And again, I'm not saying that we're going to take out the highs, but at least suspend some of the craziness and get these markets kind of back in balance, which is certainly not the case for the last couple of weeks. But we're at the lows, all right? We're at the lows. We're at that 25, 26% threshold. Here is the Dow Jones. We're at the lows, okay? The Dow Jones actually has a really nice running channel from a long time back. Here is the weekly chart. You can go back to 2008. Major support. Look at this 200 EMA. Okay, we've just dropped straight down to it. Are we going to find a way to recover from there? It's possible. Are we oversold on a lot of these time frames? Yes. I mean, technically speaking, we have hit some circuit breakers on the way down. We have oversold conditions on a lot of currency pairs, a lot of stocks. One thing I'm also looking to trade, this is the American Investor, I think it's, the Association of American Investors. So the AAII, I have a sentiment survey here that we talked about last week. This is about the same as last week. I think this was as high as 51.9% last week. It's now 51.3%. But historically, when this sentiment survey is 40 to 50% bearish, meaning retail traders are now majority bearish, what that tends to show is bottoms are coming. But again, as they say, historical performance is not indicative of future performance, right? What happens in the past cannot necessarily guarantee future results. But we learn from history. We apply probabilities based on what we've seen in the past. We try to find patterns in the market. So a majority right now showing bearish sentiment, to me, looks like on the sidelines as a, kind of bigger market maker, institution would be contrarian against that. So as retail crowds are getting out, as retail crowds are trying to hit the panic button and sell, arguably smarter money is trying to buy. So is it going to happen? Am I calling the bottom? Absolutely not. But I'm looking at something like this to start at least helping the market balance ever so slightly. All right. So recap for today. Again, I would highly encourage you to come into my trading room this week if you wish. It's right here. There's the option under the smarttrader.com. Go into Marketplace. If you're in your charts already, you go into this vertical toolbar and click on that little shopping bag that gets you into the Marketplace area. You can go right into the main page, smarttrader.com, go into that Marketplace tab, and you find it under the featured window. And with the Flex Trading Room, we are live 3 times a week, Tuesday, Wednesday, Thursday. Videos like this, my weekly outlook, I'm posting this inside my Flex document for the Trading Room. I'm posting this inside all my social media outlets so everybody can see it. I'm in this just like everybody else. I'm a full-time trader, looking to do the best I can, making some profits. We call some great trades. We have some good results, and it feels a heck of a lot better to be doing this together than on an island all by yourself. And especially in this environment, there's so much good opportunity. Let's have some good, proven strategies, systems. Let's keep a nice, cool head. Let's focus on our equity management. Let's focus on good trading. Let's get the job done. So Flex Trading Room, whatever it takes, everybody. All right, let's have a good week. I'll see you all in the trading room. Take care. If you have any questions for me, reach out. You can find me out there on social media, Instagram, Twitter, Facebook, and YouTube. See you all soon, everybody. Take care. Bye.